Nvidia, $4 trillion market cap, okay? So this is one that has obviously captured a lot of investors' mind share over the last few years, as it should have. Their numbers have been ridiculous. So if we were to go to our charts featured on 1000X, okay, you're gonna have your flapjacks flipped when you go ahead and pull up Nvidia here. This is just ridiculous. I mean, just ridiculous. I mean, look at that. On a trailing 12-month basis. Look at that chart. It's just ridiculous, right? And obviously Nvidia's expected to continue to grow. But just a ridiculous kind of, revenue growth rates. I mean, you look back here, 25 billion, you're looking here now 130 billion. Like, just ridiculous, man. Absolutely incredible what this company has done. But here's the deal in regards to Nvidia and what it means for its stock price, okay? Big problems for Nvidia's stock price in 2026. Big problems. Last year, no issues. This year, no issues, right? Obviously, it's had the drama with the whole April situation, right, as all stocks did. But at the end of the day, like, there's nothing to really be worried about in any significant way, at least in my opinion, for the last few years. 2026, it changes. Because what's going to transpire in 2026 is Nvidia is going to run into a wall when it comes to growth rates. The growth rates are going to slow massively. And so what you're going to have happen is it's going to be an awkward year for Nvidia, because Nvidia is still likely going to be growing the business, but you're going to have a huge turnover in the shareholder base. And that's going to occur not only in 2026, but that's going to roll all the way into 2027, where essentially Nvidia is going to go from a stock that has been a stock that's attracted all the growth investors, and people are like, oh my gosh, Nvidia's growth is crazy, to value investors will start to step in as Nvidia stock falls 26 and 27. And Nvidia stock's going to fall because growth investors will sell out, because the growth rates will start being very small for Nvidia, especially if you compare them to anything in the recent years. So a lot of people will be like, okay, that's it. No, if it's a growth plus value investor, some will stay invested in Nvidia. But a lot are going to run, because there's going to be certain quarters next year that, in my personal opinion, Nvidia is going to, maybe be putting up like 10%, 15% type revenue growth. And when you've gotten spoiled by 50%, 60%, 80%, 100% growth rates, and then you go down to 10%, people are like, I'm out, at least as far as the extreme growth investors, right? And then even the algos start getting spooked by something like that. Because algos, they can't, like, they're still not intelligent enough to process information in a way of being able to understand, like, the algo just looks at it and says, this company was growing revenue 70%, now they're growing 10%, it's about to go negative, right? Like, algos, I know we would like to try to give them credit, but they're still pretty dumb. And so you gotta understand that. So basically, and then the other issue for Nvidia in 26 and 27 is going to be AMD, because AMD is going to be showing ridiculous growth rates, at least in my personal opinion, 26 and 27. So people are going to be looking at AMD having these insane growth rates, and they're going to be looking at Nvidia having very small growth rates. And although Nvidia's absolute number is still going to be phenomenal, because Nvidia's business is so big now. So even if Nvidia, if you got a $150 billion business and you grow it, 10%, that's still an additional $15 billion of revenue. It's a huge number, but it's the growth rate percentage people really look at. And they're like, what happened here? Meanwhile, AMD is going to be putting up ridiculous growth rates, shocking growth rates in 26, 27. People are going to be like, oh my gosh, like, this is where it's at. So the growth investors will flip out of Nvidia and they'll flip into AMD, at least in my personal opinion, because of the growth rates they'll put in. And then what's going to happen with Nvidia, the stock will go through a troubling time in 26, 27. And what will end up eventually happening is value investors will step in Nvidia, which is going to be very fascinating. And this isn't the first time I've seen this. I've seen this a million times in regards to these big tech stocks. I watched it with Apple. Apple used to be a super growth company. Like a super growth company. They were growing ridiculous growth rates. iPhone was just taking off. And then they hit it. The wall. Didn't mean that Apple stopped growing. It just got much harder for Apple to grow and put up great numbers. So what happened is Apple growth shareholders started to leave. They're like, okay, like, the fun stopped as far as the insane growth rates. Now this has just turned into a value stock. And then as the stock fell and went through a very tough time, who ended up stepping in? Value investors. Warren Buffett, the ultimate value investor, stepped into Apple, right? Warren Buffett had no interest of buying Apple stock back when it was a high growth company and it traded at P ratios of 30 plus, when they were putting up those insane growth rates, right? But once Apple showed that it was a consistent business model, the growth rate shrunk huge. All of a sudden, and the stock price came down significantly, and the P ratio on Apple fell to like, geez, at the lows. I remember looking at Apple, and there was like 11, 12, 13 P ratio, kind of when it was going through that kind of awkward time of shifting from a growth shareholder base to a value shareholder base, right? Somebody like Warren Buffett looked at it and he's like, looks great to me. I love this, right? So Nvidia is going to go through that in 26, 27. It's going to be a very awkward time for the stock. But we're not in 2026 yet. We're not in 2027 yet, right? And so, and keep in mind, it could get difficult to just bet against Nvidia just straight up. It might pay off, but it's going to be difficult because when that change in the shareholder base happens, it's not necessarily like the stock just crashes right away. Sometimes that can happen, but sometimes a very slow crash. So if you think you're just going to buy puts and you're going to be good, you got to go a little further out in duration in regards to that. Because if you're in a situation where you start buying puts on Nvidia, right, that expire 2 months from now, right, and let's say we're, at the end of the next year, it doesn't mean it's going to crash right away. Like it could be a very slow grind down that lasts a year, year and a half, 2 years. You got a big growth shareholder base in Nvidia. It's going to take a while to get those folks out of there. They're not just going to leave overnight. It's going to be in batches over time, right? And value investors won't step in Nvidia for that first year. So it's just going to kind of keep falling. But it's going to be likely a methodical situation unless you have the whole market go down. Then that completely changes it. Then you're just in a straight crash, right? But it's a methodical changeover. It doesn't happen immediately. But eventually Nvidia gets to a place where the stock starts to attract value shareholders. And they start to look at it and they're like, look at the P ratio on this stock. Look at the forward P on this stock. It's one of the greatest companies in the world. It's still growing. I want to buy this. So it'll be a changing of the guard, but that's a 26, 27 story, okay? For now, we're still in 2025, and it's just, great growth and, those sorts of things, and NVIDIA's putting up their numbers, but everything begins to change next year, okay? Alrighty, guys, next one up here, investing in the AI rally.
I think you're diversified by just owning the S&P. That diversification has taken a major hit because if we go back a decade or so, you'll see that info technology, which is a lot of the companies we're talking about, was only 10% of the S&P.
By the way, it's getting hot here in Vegas. I got to take off my jacket, man. Whew, summer's here now. Summer's here, baby.
Now it's 32%. So you're going to have to look outside that to diversify. Now, it's a greater diversification than I have, but also, when you take a look at managers, 75 to 80%, to your point, underperform the S&P every year. And guess what? It's not the same. A lot of them are the same. But my point is that even those that have outperformed have said, they come on and say, I'm going to overweight tech or I'm going to underweight this, which to me is a bunch of crap, right? Because all you're saying is I'm managing to the S&P rather than managing to return.
Oh, Mr. Shorthill's Capital seems fired up today. There might be a fight, man. Let's see.
You'll see those that have that uber performance in a year.
Who wants to try Mr. Shorthill's Capital today? Who wants to try?
Fall back to below the 75%.
Let's bring in Bryn, who's with us to talk about Nvidia hitting $4 trillion. Certainly one of the more high-profile members of the committee to be in this name for a very long time. What does this move mean to you? What does this milestone mean, Bryn?
I think the milestone is where it's incredible is, NVIDIA's numbers won't come out until the end of August. But you have a $4 trillion company that's going to grow revenues this quarter at 51% and earnings at 46%. So I think they're on a different calendar year. In fiscal year in 2026, this company probably does $5.50 of earnings. It's just incredible to have a company this size still growing revenues and earnings so quickly. And I think we have to remember, though, it's almost been exactly a year where NVIDIA has been basically sideways between 140 and 100. So you had to be patient over the last year. I've been selling calls, but now that you've had this base that it's broken out of, and I think that really, to me, what's catalyzed a lot of things is when Mark Zuckerberg has come out and is poaching these engineers for $100 million signing bonuses. And so if you think that AI is getting long in the tooth, look again. I think it's just like going in from third to fourth gear from these hyperscalers spending, which we'll all hear about in the next couple weeks. So I think it's really interesting and exciting, not interesting, but exciting about NVIDIA that it's finally broken out of that 1 year base. And so you could easily see this name creep up into the 200s because of this strong earnings and revenue growth. So I think we're in this moment of time, and NVIDIA, as Joe, we talked about the other day, NVIDIA, I think, will continue to be a strong performer towards the end of the year.
So people talk about, like, you know, so a lot of people heard this $100 billion signing bonus number and they're like, oh my gosh, that's ridiculous. Like, is he crazy? Like, is Zuckerberg crazy? Like, who's worth that much money, right? I'll put it to you like this. There's quarterbacks in the NFL that make over $50 million a year, okay? How much is an NFL franchise worth? A few $1 billion, okay? A few $1 billion. And they'll pay an NFL quarterback $50 million plus. We're talking about almost a multi-trillion-dollar company now in Meta, right? You sign an employee for $100 million, right, to do some sort of employment agreement that they're going to work there, you know, their hardest for a few years. If that's a game-changing AI employee, they have the potential to help Meta, you know, change its market capitalization by tens of billions, hundreds of billions, $1 trillion if they're really a game changer, right? You add a few game changers, a few game-changing team around. What are we talking about there, right? Like, everything can change for a company. Look at Apple. Apple was going to go bankrupt until they created a game-changing team with Steve Jobs, Johnny Ive, and a few others, and Apple became the biggest company in the world off of that. Well, used to be. Now Nvidia overtook them, right? But created a $3 trillion most profitable company we ever seen off of actually a relatively small team at Apple, right? And so you got to understand, like, if you're going to pay a $100 million signing bonus to a really top tier employee to have them around for the next few years, like, they could end up adding dramatically more than $100 million worth of market capitalization to Meta over the next 5-10 years. Like, we could be talking about, you know, like I said, if Meta has this super intelligence team's a game changer, it could be a team that adds $1 trillion of market cap or a few $1 trillion of market cap on Meta for the next decade. Like, then you look back, you know, kind of like, and Zuckerberg's got a great history of doing this. He just usually does it with buying out companies, right? Look at Instagram. People thought it was insane that he paid $1 billion for some app that people share pictures on, right? They didn't see the vision back then. And now we all look and are like, dude, that was like the king acquisition, right? Like, what a legend for doing that. We look at WhatsApp when he bought that for $19 billion. By the way, just wait to see the monetization numbers that come in for WhatsApp over this next 5 years. People will look back at that one and be like, that was a $19 billion buy, but what a steal, right? So I think that's the way we'll look back at a lot of these employee deals longer term.
I think absolutely. I agree. Technically, you're seeing a breakout, and this is where the spending is. You know, and let's talk for a second about Broadcom, because they don't get enough credit for contributing to building out the AI infrastructure. Yes, we want faster chips. We want faster processing, but you also need faster networking. And that's exactly what they're doing with the XPU. They're delivering faster networking. And it is all right now a world in which the spending is being geared toward those that can actually provide the opportunity where you don't have to stack the chips, where one chip ultimately is enough. And that's why they're in the sweet spot. I don't see the spending at any point dissipating. We've had moments over the last year where we thought that you'd see a slowdown in spending. Steve, you've been accurate in pointing out you didn't believe that was going to occur. And just look at Apple. Look at the reasoning behind why Apple is currently being punished, because they don't seem to have a steady direction on AI.
They don't innovate, as I've said many times. But look, the story, let's not forget the base story in AI. It's the fastest adoption of any technology in history, faster than the internet, which was free to users. A lot of users are paying subscriptions for ChatGPT and others. So it will continue to go. But what's most interesting about it, despite the major CapEx budgets, it's not only the ones on the receiving end, like Nvidia, it's the ones on the spending end, and you typically don't see that. So it's a very unusual time.
I thought Melius Research had an interesting note, and Bryn, I'll get your take on this too, because they look at the landscape, and I think partly to Joe's point, they're in agreement where they're like, okay, you want to continue to buy AI semis, but they say to exercise caution on SaaS names. They want you to continue to buy the Nvidias, they want you to buy AMD, and they want you to buy Joe's Broadcom, but they don't really want you to buy Salesforce, nor do they want you to buy Workday or Adobe. They see where the puck maybe is going, and they want you to go there. Do you agree with that call?
I think that we'll see. I mean, Salesforce is expensive. Obviously, Mark Benioff, they're spending a ton of money with their agentics, but I think it's an open field. So I think the report is sound, but I still think it's early days, though. Obviously, Salesforce, ServiceNow.
Salesforce is down 19% for the year? That's a little strange to me. 19%? Really? For Salesforce? Shoot. I mean, this is a very consistent growth company. Maybe they don't have the growth rates that some people wish, but, you know, I know they've had a very much a slowing business here. But Salesforce? Really? Down that much? I'm surprised. I mean, forward P of 30, yeah, it looks kind of expensive. 2-year forward P, though, 21 doesn't seem that bad. Huh. Might have to do a little digging on the Salesforce and see what's going on.
Now, all of those companies do so much more than just agentics or agents, et cetera. But I do think, though, that there will be winners and losers. And as we remember going back to 2012, the early days of the cloud, no one believed in it. No one believed in it at all. But it actually allowed Microsoft to re-rate, Amazon to re-rate. And so I feel like we're in these early days where we're not going to know.
It wasn't that no one believed in it as somebody that was investing back in 2012. It was just people were confused. They're like, the cloud? What is that? Right? And I remember being in the market being like, I hear about this cloud all the time, talking about the cloud. I'm like, what the freak is a cloud? Like, I'm like, what is this thing? Right? So that's more, it's just people had trouble understanding it at first.
Who the winners and losers are. So I wouldn't take this piece and say Salesforce or ServiceNow, but I would just say it's early days, and so there'll be a lot more winners and losers. But I think Nvidia, Microsoft, Palantir are clearly going to be the winners in the space over the next couple of years.
Bryn, good to have you on. Thanks for jumping on to talk about Nvidia. Had to hear from you today. Bryn Talkington back with us in the days ahead. I am almost certain of that. More SaaS names. I mean, you no longer own Salesforce.
No.
I think many of our viewers probably do. But you do have Oracle and ServiceNow and Viva and DocuSign and Zoom if you want to talk about so-called, SaaS names.
Yeah, and clearly the winner there has been Oracle. I think, Jimmy, you're participating in that with me as well.
I've had it for a couple of years.
Leader. There are some other names, DocuSign, Zoom. That
by the way,
recovered.
Oracle, your Oracle, up 88% since the bottom. If you really want to know how powerful the AI trade has been, look beyond the mega caps, because the core weaves of the world are up 250%. Quantum computing, IonQ, which was a Bryn name that she brought to us originally, up 118%. Power names like Vertiv, Oracle 88, Vernova 86, Broadcom 78, Dell 72, Constellation Energy 68, Eaton and IBM respectively 43 and 31%. So you need to really look beyond the mega caps to see where the best gains have been.
Yes, and I think you're at a little bit of an inflection point. I think what we witnessed in the last 12 months was that there was this period in 2024 where software outperformed semis. And it was on the premise that software was now going to take the handoff on the tailwind of artificial intelligence advancing towards generative AI. I think now we're back at that inflection point where we're going to see the return, both in the form of sentiment and positioning, to the semiconductor names. One of my favorite semiconductor names, which is clearly breaking out, is KLA Corp. We do not own it in the Joe T. Obviously, we've owned it in the past, and it certainly will be a candidate when we rebalance at the end of
Joe,
July.
do you have the other semi-caps? Do you have AMAT? We have AMAT. We've talked about that.
Yeah, we've
before.
talked about. So semi-equipment names, they're rebuilding the positioning. They're seeing the momentum being reestablished once again. But I think it's an inflection point. I think Adam Parker on Closing Bell talked about this with you several months ago, where it was, okay, let's now go away from software names. Let's move into the semi names. And that's proving to have the fruition. But if I can, really, it's Oracle that stands out in the software
If I can just point out that what you're describing has a lot more to do with sentiment than fundamentals, all right? The semi-cap equipment names, the theory behind that, the thesis has remained constant for several years. But they went through that period, as you pointed out, the 24, that nobody liked it. Now they're coming into vogue. And that happens with these subsectors. I do think as we're talking about these subsectors that you can pick stocks. Scott, forgive me, because I go to this often, but you didn't mention it. Cisco is in the early stages of what Oracle started to do 3 years ago. Oracle, prior to 3 years ago, was looked at as just a database company. They got this Oracle Cloud infrastructure going, and their multiples shot up from the high teens to now the low 30s. Cisco is in the early stages of doing the same thing, and for the same reason. The same drivers are there, which is you're building out all this infrastructure for AI. It's going to come to Cisco's benefit.
Hey, I want to thank you so much for watching that clip here today. I hope you really enjoyed that one. What you're looking at right now is 1000xstocks.com. 1000x does not just show you a billion different metrics that are completely irrelevant. It's curated, mandatory metrics, advanced metrics, curated for long-term investors, not for traders, so you can understand a company on the highest level possible, how it operates, and most importantly, making judgments on whether you want to invest capital into a company or not. Understanding the upside, the downside with companies. Is that company worth our investments, or shall we keep our hands away? So how you can access 1000xstocks.com is you can go to the description area of this video, or you can go to 1000xstocks.com, apply for access to the service. So Sofi, here's the deal. Sofi is going to continue to roll higher as long as there's an overall feeling of positive sentiment around the stock market. Now, you look at a day like today, it was down. I'm not talking about that. Like 1 day, 2 days in the market mean nothing. I'm talking about as long as the market continues to feel like it wants to take risk. Investors want to take risk. They feel like they're underweight equities. They got to buy. Sofi is going to continue to run. And you'll see the stock cross 20. You'll see it move to 22. You'll see it then move to 25. If you get into a market that actually legitimately goes risk off, where people just start selling stocks again week after week after week, like what we went through from mid-February to the second week of April, then you could talk about SoFi falling back under $15 again. But outside of that scenario, this one's going to continue to show momentum. It's a very strong stock right now, and the earnings have been just improving the earnings picture, the revenues, the members. They post another great number this quarter. SoFi is going up heavier, right? There's a lot of innovation that's going on in fintech right now, and that is seen as a very bullish catalyst for a company like SoFi over time, right? Additionally, Robinhood's had a lot of momentum there, right? And when Robinhood pushes up, it can push up a lot of the other fintech names as well. Coinbase has seen some big gains over this past bit of time as well. We can call it the last 6 to 12 months. That also helps boost up a lot of these fintech names because they kind of all get put in that category, and SoFi is one of those, right? Let's call it the super innovators in fintech, right? You see companies like Robinhood, you see companies like Coinbase, you see companies like SoFi. They're kind of their own class of stocks. Now, at some point, we're going to get real risk off, right? Where the market's going to go down for several months in a row. Is that this year? I don't know. Maybe it's at the end of the year. I don't know. Maybe it's next year. Maybe it's 2027. At some point in the next, we can call it a couple of years here, you will get a major risk off market where the market trends down month after month after month for many months in a row, right? At that time, stocks like Robinhood, stocks like Coinbase, stocks like SoFi will get hit heavily. But to get the timing right there is very, very difficult. Now, that's what makes these stocks actually interesting to hedge against come the time period when you think okay, things have gotten a little too frothy here. We're going to go ahead and play the opposite side, right? And hedge against those over a 6 to 12 month span. But, right now I'm kind of still it's not the most attractive kind of risk reward there from a hedging standpoint. So the moral of the story is here in regards to SoFi going higher until we actually get a for real risk off market, which at some point that'll happen, no different than that camera all of a sudden blurring out, right?